Hello and welcome. It is Friday. This is the Marketplace. Here we analyze the market. We talk about trends and investment and how global development impacts your business activity. On the program today, Deputy Bank of Ghana Governor declares central bank's intention to initiate a process to boost financial inclusion through digital technology. We're looking at that here on the Marketplace. And also reports saying that number of jobs lost as a result of the downturn in the UK oil and gas sector could top 120,000 by the end of this year. All these and more here on the Marketplace. You can interact with us if you want to actually tweet. Our handle is Joy Business GH, and on Facebook is Joy Business. My name is John Kojo Amwako. For more stories, you can log on to myjoyonline.com/business. I'll be right back with more business for you. You're welcome back, and this is the Marketplace. Our first story: the central bank will soon initiate the process in a bid to boost financial inclusion through digital technology. The bank also advanced moves to ensure interoperability among operators of the electronic money transactions to enhance the digital financial services here in Ghana. The first Deputy Governor of the Central Bank, Millicent Nah, disclosed these at the launch of a 4-year Ghana Digital Financial Services initiative here in Ghana.
Majority of Ghana's population is engaged in some form of formal financial services or the other, with digital financial platforms driving recent expansion. Unfortunately, regulation of electronic money transactions by the Bank of Ghana has been a problem. Apart from the EMI guidelines review, the central bank says it has also advanced moves to achieve mobile money interoperability, which it says is a key enabler of digital financial services. Speaking at the launch of the Ghana Digital Financial Services Initiative, First Deputy Governor of the Central Bank, Millicent Nah, spoke about how the initiative would expand financial inclusion.
The 2015 Global Index Survey revealed that Ghana has made significant progress in promoting financial inclusion since the previous survey. The proportion of adult population using formal financial services rose from 29.4% in 2011 to 40.5% in 2014. As you may well know, within the intervening period of the two surveys, the bank intervened with some policy measures or responses to enhance financial inclusion. Notable among these policy actions were a new national payment system strategy, which seeks to promote both the use of electronic payments over cash and financial inclusion. And also the electronic money issuers and agency guidelines aimed at promoting safe and secure issuance and acceptance of digital money as a means of promoting financial inclusion. The signaling effect of these policy actions of the bank has resulted in marked increases in mobile money transactions within the past 3 years. The amount of mobile money float balances with partner banks was 223.3 million in 2014, compared with 547.9 million in December 2015.
The $5.6 million Ghana Digital Financial Services Initiative is being funded by the government of Switzerland. Head of Operations of the Economic Cooperation Division of the Secretariat of Economic Affairs of Switzerland, Ivor German, explained to Joy Business why his country is supporting the initiative.
It's very important for us to be able to contribute to a new technology which will bring access for people who didn't have access to banking services, and we thought that this project that builds upon earlier contributions that we did on a more global level, now in Ghana, the time is right to actually engage in such a digital financial service program. Apart from financial support, we are providing expertise, we're providing the knowledge that we have acquired over time. There are also synergies with some of the other programs that we have here in Ghana, in the financial sector, in the banking regulation sector. So I think it's more than money. It's about bringing a partner together. And for Economic Development Cooperation of SECO, of the State Secretariat for Economic Affairs, it's always very important that there are collaborations between the private sector and the public sector. So here with this program we are establishing a platform for dialogue which in our view should be beneficial for really spurring innovation in that market.
The initiative is also being supported by the International Finance Corporation, a member of the World Bank Group.
The government is planning to raise almost about 17 billion cedis from investors between July and September this year. This was contained in the government's calendar covering its cedi borrowing for the second and the third quarter. But could this new round of borrowing impact the public debt and cost of borrowing for business? We do have George Yafi here to actually help us discuss, put this in detail, also give us the rationale behind it, and also how exactly is it that is going to actually impact business activities here in Ghana. George, welcome to the market.
Thank you so much, John.
Exactly. Tell me, how is government going about this fundraising?
Well, it's going to do the normal T-bills and then the bonds that we know that government normally issue these securities. Now, if you look at the 91-day treasury bill, you're looking at a total of 8.2 billion Ghana cedis. Let's come to the 182-day treasury bills. We're looking at somewhere around 4.6 billion Ghana cedis just during this period. Now, let's come to the 5-year bond. You're going to issue 2 5-year bonds, one in July and one in August. Now, the first one in July, government is looking at raising about 1 billion Ghana. So this is the highest in recent times in terms of issuance of a 5-year bond. And also, there will be a 700 million Ghana cedis being issued when it comes to a 5-year bond. Now, for the 3-year bond also, somewhere in August, government is going to issue or try to raise 1 billion Ghana cedis from investors for this particular period.
Indeed, a lot of money, but almost about 17 billion Ghana cedis just in a quarter. Is it not too much on the high side?
Well, you're right on that one, John, when you make that assertion. But again, you ask yourself, during some of the quarters, there were some challenges. Government didn't meet all its targets that it was supposed to raise. Don't forget, government has also argued that you're using these funds raised to roll over the debts that are maturing, and then the remaining are going to take care of some projects in the budget. So you're right on that one. But again, the concern here will be whether they can raise all these funds that you're looking at. But they're also arguing that they want to use the funds raised to lengthen the curve, or what do you say, delay the maturity of these debts so that you can free the space when it comes to short-term borrowing for you and I, and even businesses.
George, I do remember for just recently, I think a month or so ago, they attempted raising about 500 million from the domestic market. They ended up, getting almost about 34 million Ghana cedis from the market. Some economists and some analysts did indicate that the confidence of the public in actually some of these government securities has actually gone down. So what is the guarantee that we're going to actually have these things fully subscribed?
It is more of waiting and see, because the argument there was that they didn't get all the 500, they're looking at somewhere around 300. But the government, on the other hand, when you spoke to government, there were several reasons that they gave for that, which accounted for that dip. But again, when you look at the environment, the uncertainty, the November elections and all those things, in terms of pumping money into the economy, there are people who are sitting on the fence. So there are several reasons that have accounted for that. And again, you would want to be cautiously optimistic going into raise these amounts of money. So it's more of wait and see and what would be the cost in raising this amount of money for this 3-month period, John.
But then, George, I'm sure this is going to come at a cost and a certain disadvantage to the country. Let's look at the implication of all these bonds being raised here on the domestic market on our public debt. What's going to be the impact
You're right on that one. And John, as of December this year, the public debt stood at around 100 billion Ghana cedis. Now, obviously, going in to raise almost 17 billion or even about 25 billion for the quarter of the year could have implications on the debt. But government's argument here, listen again, is that we're using some of these funds that you are raising to pay all the debts that are maturing. So don't expect the public debt to shoot up. But you're rolling over these debts and some interest to be paid on that. So the interest cuts could add up to the debts going up, because even the IMF in their latest document, they are forecasting that we'll end this year with 73 or 74% of our debts in terms of GDP ratio. As of December, it was 70. If you try to do the numbers and extrapolate, you're looking at somewhere around, cautiously, being somewhere around 140 billion Ghana. So it could have some implications on the public debt, John.
Yeah. All right. So could this approach have any implications for business? Let's look at the impact of these on business.
You know,
here
there
in
was
Ghana.
been this argument about the fact that when government comes in to borrow, they are crowding on people like you.
Sure.
So it indeed is going to have some impact on them. Again, you're not looking at just the cost of borrowing, but even access to borrowing. If you should walk to a bank, GCB, Standard Chartered Bank, and government is saying, give me 100 billion, and you maybe might be a big time company, give me 200 million, they will lend to government. So the concern here is that it will lead to the crowding out of businesses, and also interest rates is currently hovering around 30%, could be going out, John.
Sure, sure. Thank you very much, George.
Thank you, John. It's great to be on Marketplace, you know.
Exactly. You're almost always welcome.
Thank you.
Exactly. Thank you very much for this insightful discussion that we just had here. And that was George Wiafe there giving us some up to speed on government attempt at actually borrowing some about 17 billion from the domestic market. At what rate and the implications we're yet to really find out. Thank you very much, George, with that one. And here on the marketplace, EcoBank Transnational Incorporated, ETI, says it has not brought an end to its acquisition drive. As a growth strategy, ETI, which is the parent institution of EcoBank Ghana, has grown significantly across the continent through acquisitions and mergers. However, with the current financial challenges facing the group, there are speculations that it will bring this strategy to an end. But speaking to Joy Business after the bank took a turn at the Ghana Stock Exchange, fact behind the figures series, the group chief, Ade Ayeyemi, said it's even looking to acquire another bank in Ghana if the opportunity presents itself.
What we said is that as a strategic intent, we've now acquired across all the countries. We now want to consolidate and execute against that. But that execution and consolidation of the execution does not mean that we will not, if we see an opportunity to do something, that we will not do it. But that is not what our go-to-market strategy is today. We've said that as an organization, we are not going to be number one in every market. It's not possible. The best way is to, in the markets where we are number one today, we need to create a distance to competition. In the markets where we are 1 to 3 today, we need to defend our position. In some key markets like Nigeria and Kenya, we want to make sure that we get to scale in those markets. But there will be markets where we will participate profitably because that's the best way to be able to deliver to our shareholders.
So you're concerned that sometimes big is beautiful, but you can be big and ugly, and that your efficiency can be compromised as a bank?
We recognize that size can create a problem if it's not properly used. As an economist, I understand the value of economy of scale. But economy of scale that is not properly leveraged creates a problem. As you can see, we have our data center in Ghana. We use that across the group. That is leveraging economy of scale. We've said that we are going to create regional processing centers, having been able to create centrally and distribute across the group. That is leveraging economy of scale. We said that we are going to have our innovation in some places where we'll be able to create new products and distribute it across. That is leveraging economy of scale. We said our corporate and investment bank sits in Ghana. It doesn't sit in every country, it sits in Ghana. And from Ghana, we're able to then distribute to the rest of the country. That's leveraging economy of scale. If we choose to replicate all these services and all these functions in all the markets where we are present, that is not leveraging economy of scale. That is then, we're then going to be a big company, a fat company, and a company that is not responsive, and those companies ultimately die.
The Minister for Lands and Natural Resources has asked mining firms in the country to diversify their operations by exploring other minerals beyond gold to enable them withstand global shocks during the declines in terms of prices. On Business Agenda, Kuku Aban explored this idea and spoke with Chief Executive of the Chamber of Mines, Sulemana Kone.
You're welcome to the Business Agenda on Business Live. Last Tuesday, we had the Minister for Lands and Natural Resources, Ni Osameos, call on mining firms to consider diversifying their operations. According to him, this is critical so that they would be able to withstand any global shocks, particularly when the price of gold on the international markets declines. Let's listen to him.
The main and the most popularly exploited and explored minerals, gold, bauxite, silica sand, tantalite, and others, and what we call base metals, lead and so on. We find them all in Ghana. But what we want to see done is that we want to see more exploration.
They would want to know the viability and whether it's very profitable for the...
Yes, we expect that. That's why we have first exploration. We've managed to gather and put together geoscientific maps to open the way for those who want to exploit them to have the maps available so they don't need to run around looking. They can go to a spot, you know, this area contains A or B or C mineral, then they can concentrate and look for the, viable economic areas, and then they can begin the exploitation and ask for us to give them licenses, and then they can start.
So you heard the Minister for Lands and Natural Resources, Ni Osameos, there. But what have industry players got to say, the miners? Well, the Chief Executive Officer of the Chamber of Mines, Suleiman Ukoni, agrees diversifying their operations will go a very long way to help them. But according to him, the fundamentals should be right, talking about infrastructure, railways, power, and so on. Let's listen.
I think it's a pretty good call, but don't forget that Ghana was known as the Gold Coast for good reason, because of all the minerals God has kindly endowed us with, it appears that the predominant mineral we really have in this country is gold, and therefore a lot of people would want to go into gold mining. Ghana has lots of mineral deposits across the length and breadth of the country. Very soon we would be lucky to have a mine opening up north. The Chamber of Mines visited Azuma Resources there into exploration. It's our expectation that very soon we'll also have some formal large-scale gold mining taking place in the Upper West region of this country. So in a nutshell, Ghana has lots of gold, but it also has other minerals, other deposits which have not been really exploited in the manner that gold has generally been exploited. And therefore, the call of the minister, I think, is a good one. Essentially, what he's asking for is diversification. Don't put all your eggs in one basket. And don't we all say that all the time, that you should diversify, you should have various streams of income as a person and as a country and as a sector. And therefore, if indeed we have those resources, mineral deposits within this country, I think it's a good call for us to start looking at them quite seriously than we've ever done in the past.
What has made it difficult to exploit the other ones? Is it because they are not viable, they are not commercially, viable or profitable, the reason they've been relegated, if you like?
Don't forget that besides gold, we have commercial production of manganese. We have bauxite as well. But I think essentially it has to be the focus. We have generally focused on gold mining. I think that the call being a good one should not end there. I think we should see it in reality in terms of the promotion of the mineral resources we have in this country, the diversified mineral base that we have in this country. I think it's a good call. We should and we are willing as a chamber to support them. All the trade shows they are able to embark on, which we are also interested in, particularly the Indaba. Let's showcase what we have as a country. But then again, there should be safeguards for investors, because you see, if you need, for example, competitively priced power to exploit mineral resources, we should make sure that we have them. And that is where the linkage between the mining industry, the power industry, and then again, industry itself, manufacturing. Because if you look at the statistics, it doesn't speak well of us. Manufacturing is struggling, but on the back of the mining industry, we can do so much. Not just the linkages, in terms of the supply of inputs and so on and so forth, but some of the mineral deposits themselves lend themselves to value addition, and that is manufacturing. So we can revive our manufacturing base of this country if we strategically actually exploit our mineral resources quite optimally. So there is so much we can do together. It is a good call, but it is not a call which should be left at that. We need to put something behind it, put some traction behind it, and make sure that we realize this potential that
We're taking a short commercial break. We'll be back with more.
Live.
You're welcome back. And the business activities came to a halt yesterday as part of Accra were inundated by flood after 4 hours of heavy downpour. In the past, the Graphic Road, which is a hub of automobile business, was heavily affected by such situations. However, the picture was quite different when Joy Business visited the area a day after the floods.
40,000 CDs. Between here and the building in the back and all this, we are talking about millions of CDs. And it's a profitable organization. It's not an NGO. It's not a non-profitable organization. We operate as investors to make profit on the investment we are making, like any other entity with profit targets. And when your expenses go higher, your profit goes lower. That's a simple rule of economics. So obviously it is affecting our end of year results, it's affecting our income, it's affecting everything in the financial statements of the company.
So on the basis of that, we end today's edition of The Marketplace. My name is John Kojo Amwaku. You can actually get interactive with us. On Twitter, it's Joy Business GH, and on Facebook, it's Joy Business. For more business stories, you can log on to myjoyonline.com/business. Have a wonderful weekend.